ever feel like when it comes to finance, everyone's speaking a completely different language?
Haha. Yeah, they can definitely feel that way sometimes.
Yeah, like it's this exclusive club, right?
Right.
Well, good news. We're breaking down those barriers right here, right now.
Absolutely.
Think of this as your crash course in the language of investing. Today, we're diving deep into financial assets.
The very building blocks of, well, all things money, really.
Exactly. We're talking about those intangible things that represent value or claims to future cash.
Like the keys to the kingdom.
Uh-huh, I like that. The
Yeah.
keys to the kingdom. And, whether you're actively building your portfolio or just trying to decipher the financial headlines, understanding financial assets is absolutely essential.
Totally agree. It's about empowering yourself, really taking control of your financial future.
Exactly.
And the thing is, each asset offers a slightly different path, a unique way to actually engage with the financial world.
Mm-hmm. Okay.
Some of them are names you hear all the time, like stocks, right?
Right.
Others might be more complex, maybe even a little mysterious.
Like a derivative.
Like derivatives, exactly. But they all play a vital role in this grand symphony of finance.
Okay, I love that analogy.
Yeah.
A grand symphony. It kind of feels like that sometimes, right?
Mm.
This big, complex, interconnected thing.
It really is.
So let's break it down. Let's start with the rock star, the one everyone's heard of, stocks.
Okay.
We hear it all the time. Buy stocks, invest in the stock market. But what's the story beyond the hype?
So stocks, also known as equities, they basically represent ownership in a company. You're holding like a tiny little piece of its future.
Okay.
You're essentially betting on its success, hoping its value grows over time, which pushes your stock price up. That's what we call capital appreciation.
Okay.
And then you have some companies that actually share a portion of their profits with shareholders through these payments called dividends.
So it really is like owning a tiny sliver of your favorite company, right?
Yeah.
And you have the potential to ride that wave of success. But I can't help but think of, that tech company that everybody was obsessed with a couple of years ago?
Oh, yeah.
Went from hero to zero practically overnight.
Yeah.
It's a good reminder that stocks can be volatile. Like,
Absolutely. Volatility is inherent to the stock market.
yeah,
But you know what they say, don't put all your eggs in one basket.
right.
Diversifying your investments is key, spreading your risk across different asset classes.
Mhm.
Which brings us to bonds, the smoother ride, shall we say.
Yeah. Okay, so tell me about bonds. Are they really as safe as people make them out to be?
Well, bonds or fixed income securities, they operate a little differently than stocks. Essentially, they're loans. You're lending money to an entity, could be a government, a company, even a municipality.
Okay.
And in return, they promise to pay you back the principal at a set date along with regular interest payments. So you can think of it like providing a loan, but with a guaranteed return and a schedule of those regular interest checks.
Yeah. So there's less potential for those sudden drops, but maybe not as much growth potential compared to stocks.
Generally, that's the trade-off. You get that stability, predictability, but often at the cost of a more modest return. And of course, it's really important to remember that bonds still come with their own set of risks,
Okay. Like what?
like interest rate risk, for example. If interest rates go up, the value of existing bonds can actually fall. And then there's credit risk,
Okay.
which is the possibility that the borrower might not be able to make their interest payments or even repay the principal.
Okay. So even with bonds, it's not just set it and forget it. You really have to be thinking about your risk tolerance and making sure you're choosing wisely.
Exactly, yeah. Every investment decision requires a careful assessment of risk and reward.
Okay. Makes sense. But what about when you just want, like, absolute safety?
Yes.
Where does cash fit into all of this?
So cash and cash equivalents, these are your financial safe haven, that trusty piggy bank that we all need.
Everyone needs a piggy bank.
Exactly. That's what we're talking about here. Could be treasury bills, certificates of deposit. Those are CDs, money market funds.
Okay.
These are the go-tos for preserving your capital. They offer really high liquidity, meaning you can easily access your money,
Okay.
and a very minimal risk of loss.
So maybe it's not going to, like, make you rich overnight, but it's essential, right, for weathering those financial storms that inevitably come up.
Absolutely.
Or maybe you have short-term financial needs and goals, and you know that money is going to be there when you need it.
Right.
Okay, that makes sense. Now, I've always found derivatives a bit mysterious.
Yeah.
It's like they sound like something out of a Wall Street thriller or something.
Little bit, right.
Yeah, a little bit cloak and dagger.
They do have a certain allure. So derivatives are basically financial instruments, and their value is derived from the performance of something else.
Okay, so give me an example.
So let's say an underlying asset, an index, even an interest rate. These are all possibilities. Common types of derivatives include things like futures contracts,
Okay,
options, swaps,
okay.
forwards, to name a few. Let me give you a concrete example. Imagine a farmer, and this farmer is about to harvest a huge crop of wheat, right?
Okay.
Now, the farmer's a little worried that the price of wheat might drop by the time they're ready to sell.
Okay. Yeah, that makes sense.
So what they can do is enter into a futures contract. And that contract basically locks in a specific price for their wheat to be sold at a future date, regardless of what the market price does.
Oh, that's really interesting.
So even if the price of wheat drops, they're protected because they have that contract. That's what we call hedging, using derivatives to manage and mitigate risk.
So essentially, they're betting on the future price of something, but without actually owning it yet.
Yeah, that's a very simplified way to look at it, but yeah, you got the right idea. They can be used for that, for hedging, like in the farmer's example, or they can be used for speculation, which is where investors try to actually profit from those price movements in the underlying asset.
Okay.
But, and this is a big but, derivatives often involve something called leverage. And leverage basically means you can control a large amount of an asset with a relatively small amount of your own capital. So it's like it magnifies your exposure.
Mm-hmm.
And that can be really powerful if your bet goes the right way, because it can amplify your gains, but if it goes the wrong way, it amplifies your losses too.
Okay, so high risk, high reward territory. Not for those who, faint at the first sign of a dip in the market.
Definitely not for the faint of heart. You really got to have a high risk tolerance and a deep understanding of what you're getting into.
Okay. Now, for those of us who prefer a more hands-off approach,
Right.
or, just starting out feeling a little overwhelmed, there's mutual funds and ETFs.
Right. Those are great options for exactly that, for people who want to diversify their investments and maybe don't have the time or expertise to actively manage their own portfolio. And the great thing is, with both mutual funds and exchange-traded funds, you're pooling your money with other investors to invest in a diverse basket of stocks, bonds, or other assets.
So instead of trying to pick winning stocks or, time the market perfectly,
Right.
you're spreading your bets across whole bunch of different things.
Precisely. You're letting the professionals manage the investments, and you're benefiting from that diversification.
Okay, and remind me again what the difference is between mutual funds and ETFs.
So ETFs, they trade on stock exchanges just like individual stocks do, which gives you a little more flexibility.
Right.
Whereas mutual funds are typically bought and sold directly through the fund company. But both of them really offer a great streamlined way to access different markets and sectors.
Got it. Okay, so you can kind of build this diversified portfolio without having to, do all the research and the picking and choosing yourself.
Exactly. They do a lot of the heavy lifting for you.
Okay, great. Now let's talk real estate.
Yeah.
Everybody talks about real estate as a good investment.
Right.
But what if you don't want to deal with the hassle of buying a property or, being a landlord or any of that?
Well, that's where REITs come in. Real estate investment trusts.
Okay.
And they allow you to tap into the real estate market without actually having to buy or manage any property yourself.
Okay.
So basically, REITs, they own and operate properties, could be anything, shopping malls, apartment buildings, office buildings, you name it.
Okay.
And then they distribute most of the income they generate from these properties to their shareholders in the form of dividends.
So it's like you own a little tiny piece of a whole bunch of different buildings.
Exactly.
Mhm.
And you get exposure to the real estate market, but without the headache of being a landlord, like you said.
Love it. Okay, last but not least, let's talk commodities.
Yeah.
The actual stuff, the stuff that the world runs on.
That's right. So commodities are essentially the raw materials, things like gold, oil, agricultural products. And the prices of these commodities are driven by global supply and demand.
Okay.
Now, you can invest in commodities through a variety of ways. You can do futures contracts like we talked about before, or ETFs.
Okay.
Or there are even commodity-focused mutual funds.
Okay, so lots of different avenues to get exposure to the commodity market.
Exactly.
Well, we've covered a lot of ground today. Journeyed through this whole landscape of financial assets.
We have.
From the simple to the more complex. What would you say is the big takeaway? The one thing you really want our listeners to walk away with today?
The goal is never to make anyone an expert overnight,
Right.
but just to give you a solid foundation to
Mm.
understand what these assets are, how they work, and how they interact to shape this fascinating world of finance.
Exactly. It's about demystifying these concepts,
Mm.
giving you the tools and the knowledge to make informed decisions about your money,
Yeah,
whether you're a seasoned investor
right.
or just starting out on your financial journey.
Exactly.
Now that we've laid that groundwork, I'm curious, what asset piques your interest? What are you going to explore further?
Let us know.
Let us know.
Share your thoughts on our social media channels. We'd love to hear from you.
Absolutely. And until next time, happy investing, everyone.
Happy investing.
Bye.
Bye.